Daily Rates Live with the Mortgage Calculator. Today we're going to be talking about short-term rental loans after we go through some live mortgage rates. So give us just a minute here to go live on all the different platforms. We put the chat up on the screen, so feel free to drop a comment there in the chat as you tune in. Great topic here for today, something that's one of our favorite loan types. I see some comments already coming in. Appreciate that. Happy Friday to everyone. All right, it looks like we're live on all the different platforms, so we can go ahead and get it started here. We'll take the chat off the screen for now, but please keep dropping comments there in the chat. You can also drop any questions that you have as we go through the deep dive presentation here today. But we'll go ahead and get it started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through some live rates, and then we do a deep dive into a different topic. Today's topic is going to be short-term rental loans, something that we love here at the Mortgage Calculator because we specialize in non-QM loans and working with investors. And this is an amazing tool to have for loan officers out there, an amazing product to use for investors out there. So we'll do a deep dive into that here shortly. But before we do that, let's go ahead and pull up the rates. So Nick, if you're ready, let's go over the pricing tool and see what the rates are looking like this morning.
All right, let me switch my screen and we will check it out. So the news this morning, not so great for the mortgage rates. Let's go ahead and see how that actually looks. So this is our pricing tool, as Kyle mentioned. This will show us the general rates and the APR for today, January 5th, just after 11 a.m. Eastern. So all of our general programs are live here. If you'd like a full breakdown of all the fees, all the itemized fees that go into the APR, please get with our team members. We have over 300 licensed loan officers in 23 states. And we can do our DSCR short-term rental loans, a topic for today, in 44 states. So to compare across the programs, we'll set up a basic scenario here to compare APR. Set up a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We'll have the computer find the lowest rates we can offer for conforming conventional. We'll compare that to FHA, which is usually the second option most people compare. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional options. We also have VA and USDA. VA is only for eligible vets and active service members. If you are eligible, just let us know. We can quote it, no problem. USDA is only for eligible properties. If you do happen to be looking in one of those rural areas, just let us know. We'll start with conforming conventional. We'll do purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio here of 40%. So with these settings, let's see what the rates are doing. Yep, two days of not so great news. So the rates ticked up just a touch, 6.125 rate for 2.375 discount points and costs. Puts the final APR at 6.403. Earlier this week, we were at 6.2, so just went up just a touch there from some of the recent economic news. Hopefully next week we get some better news and it starts to go down, as we all expect. Now, if for any reason our customer doesn't qualify for conventional, the next option we want to compare is typically an FHA option. So we'll set up the same exact scenario. This time we'll select our FHA programs. FHA does allow more leniency on credit issues and events, as well as a much higher debt-to-income ratio. But we will keep everything exactly the same so we can compare apples to apples here for conventional versus FHA. And again, FHA ticked up a touch just like conventional, so they're almost identical again. 5.5 rate for 2.375 discount points and costs. Puts the final APR for FHA here at 6.428, almost identical to conventional. It's actually a touch higher. However, I definitely recommend, with the way the rates are going, our customers that qualify for both definitely do not overlook the FHA options. And our customers that need to use FHA, this APR does include the upfront and yearly mortgage insurance that is required. So definitely a good option for our customers. It's almost identical to conventional, which is great news for our customers that need to use an FHA program. Now, if for any reason our customers don't qualify for FHA or conventional, many other banks or lenders will unfortunately have to deny that customer, but that's where we love to come in and approve our customers with over 5,000 additional options beyond FHA and conventional here under expanded guidelines, also known as non-QM. So when we select this option, everything will stay the same. However, we have a new box pop up where we can change the income. So full doc is what we use for conventional and FHA. That's 2 years of tax returns. So we'll typically choose non-QM to take advantage of one of these other programs. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. We'll show that in a minute. We have our personal bank statement, 12-month is what we use for the demo. That's the most popular. We also have RSU, stated income, VOE, 1099, P&L, no income, CDFI, all kinds of different options. The most popular here is the 12-month personal bank statement, and that's for our self-employed borrowers. Many times the self-employed borrowers with tax returns may have different write-offs and may not qualify at all, or just may need a little extra income to get that home they want. Either way, we can solve the problem, no tax returns at all, just their last 12 bank statements here to determine a debt to income ratio using just their cash on those bank statements, no tax returns at all. So in this example, we're putting 40% debt to income using just their bank statements. So let's check the bank statement options this morning. Oh, looks like that special yesterday was a one day's special there. This one is still a good option. It's a little lower than it was before too, which is great. 7.25 rate, 2.125 discount points and costs. Final APR at 7.638. So this is typical here. Bank statement just about a point higher than conventional, which is typical markets. For a while there, our non-QM was beating conventional and vice versa when the rates were crazy. This is more typical. If our customers need to use a bank statement option, they can typically expect a slightly higher option here, but these are still amazing. Tons of flexibility. And if we scroll down, some of these programs of these hundreds of variations, a little bit higher rates and costs may allow bankruptcies, foreclosures, other credit issues, us to get around, as well as may use different ways to calculate the income. So hundreds of variations. Please get with our team to find the one that fits best. And now for our final live pricer, we always do investment properties for investors. First-time investors, seasoned investors, we have great options. So we'll set up the same scenario, 400,000 loan, 80% loan to value, 20% down payment. And we'll ask the computer to find the lowest rates we can offer for conforming conventional, and we'll compare that to our expanded guidelines, also known as non-QM. The government programs, FHA, VA, and USDA do not work for investments, so we'll just compare these two here. So we'll start with conforming conventional. Everything's going to stay the same as all our other demos. All we've changed is the occupancy to investment property. So let's check the conventional rates this morning. All right, best option for conventional right now, 6.99 rate, so still under 7, that's cool. 3.25 discount points and costs, puts the final APR at 7.382 for conventional, which is good. For a while there, again, conventional was going crazy. So this is a good option now as the rates have more stabilized. But I definitely recommend all of our customers that are looking at investment properties compare a non-QM example, as many times we can get very close to this. So for the final demo, we always want to provide our investors with a non-QM, also known as expanded guidelines, quote here, using the same scenario. So when we select this option, now we get some new things to pop up. First, the income must be selected. For an investment property, the most popular option, and our most popular loan here at the mortgage calculator, the DSCR option, because it doesn't require any income or employment or documentation on that from our borrower. Simply use the estimated rental income off the appraisal to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents on the appraisal can cover the PITIA of the mortgage, the expenses, aka the property cash flows, that's a ratio of 1 or higher. Even if the property doesn't quite cash flow, ratio under 1, we have some options. For the demo, we always put 1.5 as the highest value so we can see all the programs pop up here in the demo. And finally, prepayment penalty must be selected for a non-QM investment. 3 years is standard. There are options to select 0 that will limit what shows up and cost more. And there are options for 5 years, which will again limit what shows up, but does save our customers some money if they're long-term. 3 years is standard. That's what we use for the demo here. So let's check the DSCR options today. Yeah, that one before was a special thing. So today, back to more standard here, 7% rate, 3.375 discount points at cost, put the final APR at 7.513. So we're within 0.1 today of conventional. Yesterday we're beating it, which was a kind of a temporary thing. I'm guessing it was a special. But today we're still within 0.1. I'd say 100% of investors would choose a DSCR program if we're almost identical price to conventional. So definitely check out some of these options here if you're looking at investment properties and compare it to conventional. I would say most will choose the DSCR. And if we scroll down, some of these options at higher rates and costs, again, may allow bankruptcies, foreclosures, other credit issues and events. Some of these may allow different ways to calculate the income, such as our topic for today. So let me change my screen. So some of those options that you see there, obviously slightly higher rates and costs, allow short-term rental income. So very popular request, especially when we're in the DSCR realm, working with investors, and especially as prices have risen. A very popular request is to use the short-term rental income. Many investors are purchasing properties, hoping or relying on short-term rental income to increase their returns. Now, typically the DSCR loans that we go over every day are based on long-term rents from the typical appraisal report. There's not many appraisal reports that come with short-term rents. It is possible now. There are some tools, some third-party tools that we can use to estimate the short-term rents, which is typically the more common example as the appraisal industry is trying to kind of get a hold of this new concept. But obviously there are third-party providers that have some great data for us to use. So Jose, if you're ready with some examples, let's go ahead and check out our DSCR options that allow these short-term rentals.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So today's topic, short-term rental properties, is a very interesting one because, as we know, short-term rentals are the rage right now in the industry. They're, due to a lot of different reasons, right? Pandemic brought about some changes. People felt more comfortable staying in a short-term rental type property. So that probably accelerated what was already happening with short-term rental properties, right? So higher income with those properties. So many investors are using those types of loans, or putting forth those types of loans that the industry had to change. And since we know that DSCR loans are super popular in the secondary. There's a lot of money going into DSCRs from secondary, so they have tweaked their guidelines. That's something we were talking about. We like to talk about in the trainings. We like to make our observations of where is the money going and what effect is that going to have with our options, right? So what we have been seeing with the DSCRs, as we were mentioning yesterday with the ITINs, is that they are tweaking the guidelines and they are basically loosening them. And this is one of the ways that they're doing it. I mean, it's great because now we have our AirDNA options for short-term rental properties, which allows us to use estimated short-term rental comps, right? So the same way that the appraiser is going to look for comps for long-term rent, they look for comps for short-term rent. So they can use AirDNA as a tool. They can actually look in their databases, regular databases for properties that are being marketed as short-term rentals in the MLS database. They can add it that way. Or the borrower can provide short-term rental revenue reports from the seller if it's a purchase, or from themselves if it's a refi and they've been doing it for the necessary amount of time for that loan type. Most of the options out there require the borrower to have been doing short-term rentals for at least 12 months if they're going to use short-term rental revenue reports. They do want a 12-month average there, but not every single option out there has that 12-month requirement. There are a couple that don't have it, but the majority do require 12 months. So let me show you some options here to show you how we can get creative with the flexibility of the guidelines that DSCR loans offer us. So not only is it that they've tweaked their guidelines to add AirDNA and to add short-term rental revenue reports, but just the nature of the short-term rental loan allows for more flexibility of the interpretation of the guidelines and how we can use it then to meet the needs and objective of our investor looking to do short-term rental properties. So first example I have here is with our minimum down payment DSCR loan, only 15% down. And this is a prime example of where we can use the flexibility of the DSCR loan to finance it. Now, in this case, we are assuming that the long-term rent will qualify the property, but there's no issue that the property will be used as a short-term rental, no leases. Even obviously it's a purchase, but much more flexibility there, where if the long-term rent works out, no additional work needs to be done, no harm, no foul. Just take the 15% down DSCR loan, and you're able to do 7.625 as your lowest cost option, and buying that down to 7.25. And remember, this is 15% down only. So now we get into the funky stuff, right? What Nick was mentioning, the third-party tools. Now, AirDNA is an Airbnb database. They're compiling short-term rental data so that then anyone who has a subscription can access the database the same way and pull your comps. The same way you're going to pull comps for a long-term rent, you're going to pull comps for the short-term rent, similar style, proximity, size, all of those kind of things come into play. So in this case here, using AirDNA, the one thing that you're going to want to note, let me make this a little bigger here, is that for this AirDNA option, they allow you to go to the 80% without an LTV adjustment. However, you do have to have a minimum 1.5 DSCR. Your debt service coverage ratio has to be 1.5, which means that the AirDNA income has to be at least 150% of the total housing expense, PITI, and if applicable, association fee. So keep that in mind, that 1.5. But with AirDNA, you should be able to get that. That's the whole thing here. If it's a good short rental property, it will be doing those numbers. And then you're looking at some pretty amazing rates here, right? You're looking at 8.25, offering a little bit of a lender credit and buying that down to 7% as our lowest cost option. Again, using AirDNA, at least 1.5 debt service coverage ratio, we will get you the full 80% without any adjustment. So now, mind you, for AirDNA to work, there has to be AirDNA comps. So unfortunately, that's not always going to be the case for every short-term rental property. So here we have another option using the short-term rental revenue reports. In this case, this is a purchase, so the reports would have to be coming from the seller. So if they are buying a property that's currently being used as a short-term rental, perfect scenario here. You do have some pretty good rate choices here. And this is also without an LTV adjustment, right? Now, what I will say is there is a haircut within these products, depending on which option you choose. They're going to allow you to go anywhere from 115 to 125% above the long-term rent. So it's not like a free for all, right? And on top of that, there's gonna be, oh, should I say that's your limit of 100, anywhere from 115 to 125%. The haircut is gonna come from the fact that they're gonna give you anywhere from 70 to 80% of the gross number, because they figure there's management fees and expenses associated with the property. So they're not going to give you the full 100%. They're going to give you anywhere from 70 to 80%, depending on the option. So 70 to 80% of the gross. And then on top of that, they're not going to let you exceed the long-term rent based on the 1007 by anywhere from 115 to 125%, 115% to 125%, depending on the option you chose. So in this case, 8.375 is our lowest cost option, 7.5% lowest rate option. So now I have some other interesting twists on how we can use DSCR loans to meet the objective of our short-term rental investors. So for the situation where great property, the investor, seasoned short-term rental host, super host, knows what they're doing, they make it happen. They've already looked at the property. They have a good business plan. All of their marketing is in place. So they feel like it's just going to be an extension of the business they are already doing, right? So they're confident they're going to be able to make it happen. So then a great way to do this is with a no ratio DSCR loan, right? Now we have a couple different no ratio options. We have a no ratio that goes 0.75 to 0.99 DSCR, meaning you're covering the housing expense with the rent by anywhere from 75 to 99%. You're not covering 100%. That's fine. With 25% down, you can do this no ratio DSCR option at a 0.75 to 0.99 debt service coverage ratio. So a very good option to meet that need, and amazing rates too for a no ratio, right? This is not even cash flowing per long-term rent, but look at this, 8.5% is almost at par, and you can buy this down to 7.5%. But wait, there's more. Last but not least, right? Sounds like a Ronco commercial. Here we have another. This is amazing because notice it's no ratio DSCR, still 25% down only. However, this is our less than 0.75 DSCR. So this is really the perfect one. Still 75% LTV. Your property is not cash flowing here, not even to 0.75. So here you can still do a rate with the lowest cost option being at 9%, and you can still buy that down to 8.625% for the true no ratio DSCR loan. Perfect solution to that expensive waterfront property that they know they're going to rent it for $6,000, $7,000 a night. Nice big home, but long-term rents could be $15,000, $16,000, $18,000, whatever, but they're going to get some serious money. Obviously, you can see how there's going to be a good NOI there. They're not going to have a problem with a little bit higher rate because they're going to be making money hand over foot. So many different ways that we can use all of the great programs that we have to meet the objective of our borrowers.
All right. Surprisingly, I don't see any questions here, but definitely, again, like I said in the beginning, great tools to have as a loan officer under your belt, and as an investor, These are absolutely great programs here. So thank you everybody for tuning in. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So that means we will see you on Monday. Happy Friday, everyone. Have a good weekend. Thank you, Nick. Thank you, Jose. We'll see you all Monday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody.